Congratulations, you've paid off your mortgage. Huge accomplishment, all right? Now what? And I'm talking about now what do you do with the money, because you've probably thought of 1,000 different ways to spend that money or use it. I'm talking about what are the practical next steps. You've paid off your mortgage, now you've got to do what as your very next step. I've got those steps and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. If buying a house is one of the greatest financial goals people have, then certainly paying off the mortgage is like right there tied to it, right? That would be just as big of a goal. And I tell you, more and more people are attacking their mortgage these days, not because it necessarily makes the most sense mathematically in your finances because interest rates are so low, but simply because, listen, I've got extra dollars around here. Maybe I was planning on doing a vacation or planning on doing a home remodel or planning on doing something, but yeah, I don't really, this doesn't feel like the right time to either take a vacation or, with lumber prices high, we talked about that yesterday, or whatever, I'm not going to do those things. So what do I do with this extra money? And then also because some people are looking at the stock market and saying, geez, these prices are high. We've had lots of volatility. I've got some extra dollars. Should I throw them there? No, maybe I'll just reduce debt. And so, it is knowing which of those three options, delayed spending, putting it on the mortgage or investing it, those are good choices. Knowing the great one, you've got to the great one, Wayne Gretzky. Knowing the great option is dependent on your overall financial plan, your comprehensive financial plan, okay? Where your CFP is looking at all 6 areas of your financial life saying, yeah, you could do this, you could do this, you could do this, those are all good. Here's great. This is the best thing for you. If the great option is paying off your mortgage, that's wonderful, okay? That's wonderful. Work hard, get that done. Once your mortgage is paid off, what do you do? Practically, what do you do? I've got steps coming up. First thing you need to do, go celebrate. Hit that champagne, go celebrate. You should. You should be celebrating every financial accomplishment, big financial goals that you achieve. Definitely celebrate those. If you never celebrate, you'll never celebrate, all right? But after that, watch your mailbox. You need to receive from your lender, from the bank, from the institution that held your mortgage. You need proof of having it paid off, of having your mortgage satisfied. There's a few different ways that this comes in. A satisfaction of mortgage statement. Sometimes it's just a paid in full statement. You should get a copy of your original mortgage note or promissory note that has a big stamped and red paid, or some other sort of indication that not only a statement that your balance is now zero, but also that the bank or the lender, the financial institution has freed you. Has declared that mortgage that they held on the property is paid off. It is canceled. All right. So that's what you're going to be looking for in the mail. You should receive that within a couple of weeks after paying it off. If you haven't, you're going to want to contact your mortgage lender and say, hey, where's the deal? Was something, did everything go the way it was supposed to go? Okay. Next, you've got to make sure that this satisfaction of mortgage obligation is filed with your county. Okay. Now, many banks, many lenders automatically, when they send you that statement saying, hey, it's been satisfied, you're good, they also send a copy to the county, okay? But that's still your responsibility. Even if they send a copy, you've got to make sure that your lien is released from your property on your county record card with your county, okay? Otherwise, if someone if it got lost in the mail or someone accidentally put it in the wrong file or it wasn't processed correctly, then you could go a long time and then you go and sell that property and your title is messy, right? You still have a lien against it because it was never released, and the county needs proof before you can sell that property that no one's out there with their hand out saying you owe me money, okay? So Yes, most banks do this, and the county likely will acknowledge that they got it and you're good, but I'd put it on you. Once you get your letter, I would make a date and go over to the county, give them a call or go over to the county and say, hey, just want to make sure that you've updated my property and released the lien from my property. While you're there, okay, I'm going to say this is step 2B, okay, while you're there, make sure your property taxes are set up to be mailed to you. That bill is supposed to be mailed to you now instead of going to your lender if you were set up for escrow, which most people were. So since you're already there, kill two birds with one stone and make sure that not only is the lien released, but that the county should automatically say lien's released, so no more escrow, bam, we're going to direct bill for property taxes, mailing it to the address of record. And you'll just, since you're there, since you're talking to them, you'll just confirm that as well, that they're set up to send your property taxes directly to you so you can pay them automatically. Third, similar to making sure that your taxes are no longer escrowed, that you get the bill, you got to call your homeowner's insurance company and set that up as well for your homeowner's insurance. There's two reasons why you want to contact your insurance agent, your independent insurance agent. Number one is on your homeowner's insurance policy, if you've had a mortgage, that lender is listed as a lien holder on your mortgage as well. Why? Or excuse me, on your homeowner's insurance as well. Why? Because if there's a total loss, if there's a huge loss, they're listed as, hey, listen, we're at risk too. You know, we need to get our money back, the money that we've loaned out to this homeowner. So now that you've paid that mortgage off, you've got to have your insurance agent update that to remove that lien holder, remove that lender from your homeowner's policy. But then second, same thing with property taxes. You've got to tell your homeowner's insurance agent, listen, stop sending that bill to my bank for escrow, send the bill directly to me as well. And then you can confirm the amount and you can confirm the timing when they're going to bill you, because you'll now be responsible for making that payment as opposed to having it go through escrow. And the fourth step is, speaking of escrow, watch your mailbox. You should get a refund along with a full statement of your escrow balance. Now, this is assuming you did escrow your mortgage, and most people do. And what that means is every single mortgage payment you used to make had four components to it. It was principal, hopefully a lot of it was, interest to the bank, and then escrow, and that escrow was setting aside money for your property taxes and setting aside money for your homeowner's insurance. Well, when you stop making your mortgage payment, because you've paid it off, you no longer have principal and interest, but you're still going to have to pay your property taxes and your homeowner's insurance. So hopefully you have a balance. You would have a balance, some sort of balance in your escrow, that they're going to mail you a check and a statement saying, all right, here's the balance of your escrow account, and then here's how we came up with this number. There you go. And what I would do for you is I would then deposit that money into a separate, we call it a delayed spending account, a separate savings account that you use as your own personal escrow account. This is where you are saving up dollars in advance, so that when your property tax bill comes along, you've got the money, just pay it, doesn't stress you out. When your homeowner's insurance bill comes along, you've got the money right there, and it doesn't stress you out. So when you've gone to the county and you know your property taxes, you probably know that anyway for your income tax reasons, and when you've talked to your homeowner's insurance agent and you know the amount and the timing of your homeowner's insurance, you now know, okay, annually, this is how much I need to have total in this little, that I need to be prepared to pay out of my little escrow account personally, and therefore I divide that by 12. All right, this much per month needs to be going in to fund this account so that when these bills show up, I'm covered and it doesn't stress me out financially. Fifth, you then need to work with your CFP to see, will you have an increased cost in your taxes because your mortgage is gone? Now, taxes mean a whole lot of things. I'm talking about two different taxes in particular. One, property taxes, okay? Work with your certified financial planner. Some counties, some states allow a slight property tax deduction if you have a mortgage, okay? The county that I live in it's about $50, $100. If you have a mortgage on your property taxes are reduced by $50, $100, something small, okay? And so that your property taxes might go up a little bit, okay? But Some counties, including my own, well, if you have a home equity line of credit available, then you technically still have a lien. You still technically get that, that deduction from your property taxes. So work with your CFP on that to see if your property taxes are going to go up because you no longer have a mortgage, or if there's some sort of loophole or something you can work and keep those taxes at the same rate. But then you'll also want to work with your certified financial planner to see if your income taxes will go up. Why? I'm not talking about state or local income taxes. I'm talking about federal income taxes. If you itemize your deduction, if that's been a benefit to you, one of the itemized categories is mortgage interest, okay? And because you've been paying aggressively on your mortgage all along, likely the amount of interest that you've had to pay and that you get to claim on your taxes goes down and down and down. So this likely won't be a huge impact unless you've got still a large mortgage, 50 grand, 100 grand, and you make a lump sum, a big payment on that, and all of a sudden you were paying a decent amount of interest and then it's wiped out to zero. That could, if you're itemizing your taxes, that could change the amount of income taxes you pay, and you'll want to be prepared for that as well. And then the sixth step is my favorite, and that's the one you've already thought through a whole bunch of times. What am I going to do with this money that was freed up? Again, I'm going to encourage you, make a great decision. There's lots of good choices out there. A good choice could be going on vacation, buying the hot tub, saving up for the next house, putting the new roof on, saving up for retirement, doing a Roth account, maxing your HSA, helping the kids with college via cash flow. Giving. I don't know what it is, right? There's lots of good options out there. Knowing the great one or the great ones comes at the intersection of all 6 areas of your financial life, and your CFP is right there with you looking at each of those. And as a fiduciary, not just going to say, you got to invest it with me, write a check. No, as a fiduciary, they're going to say, listen, with these freed up dollars and the goals that you're trying to accomplish, here's the 1 or 2 or 3 places we need to direct this money so that you can optimize your financial situation. All right. Work with your certified financial planner on that, and hopefully you've done that even before making the decision to pay that mortgage off. To me, it's a huge goal of mine to get that mortgage paid off as well. We're aggressively working towards it. I hope you are as well, and I hope these steps help you, that when you reach that milestone, you know exactly what to do and aren't blindsided by overlooking one of these steps. Work with your certified financial planner. If you don't have a CFP on your team, you can contact one on my team. Find us online, korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there too, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.